Hello, fellow Rebel Capitals. Hope you're well. Boy, oh boy, we got a lot to talk about today. The trade war is escalating very, very quickly. How is the market responding? And then Germany comes out with their own stimulus bazooka, just like China. And then the dollar is plummeting today. Why is it plummeting? And what does this mean about the future for the U.S. economy? We're going to be going over that and a lot more here. So let's get the screen share going. We don't have Josh today. Unfortunately, he is on a flight, so it's just me going back and forth as the producer and your host. So let's see, where do we start? My goodness gracious, right here. Here's an example of how these trade wars, you can never really predict how they play out because there's so many variables. What we have to understand is the global supply chain is very complex. And sure, you can break something over there and you can guess as to how that's going to impact something over here, or the knock-on effects, if you will. But it's a complete guess. And this is a perfect example. And I've said from the very beginning that as an economic policy, I think these tariffs are terrible. As a negotiating tool, I think they're fantastic. But unfortunately, even as a negotiating tool, it creates a lot of uncertainty in the market. Now, you could be the biggest fan of Trump and tariffs and Doge, and that's great. That's fantastic. But you can't dismiss the reality of what these tariffs are, even if you think over the midterm or the long term, they will be a net benefit as far as bringing manufacturing back to the United States, increasing wages, reducing our dependency on China, et cetera, et cetera. That's great for the long term if that plays out. I have a different view, but we have to understand what happens in the short term. And maybe more importantly, it's not about what you think. It's about what the market thinks. And it's obvious what the market thinks about these tariffs. Well, let's look at this. Jack Daniels maker says Canada pulling U.S. alcohol off shelves. So this is one of those maybe unintended consequences, knock-on effects that I would not have, that was not on my bingo card. So what's happening here is the United States announces tariffs, and I'm not saying that the tariffs aren't justified or that this, we'll shelf that for the moment. It just is what it is right now. Let's talk about what's happening. It's not about the world we want. It's about it's about analyzing the world we've got. So this was not on the bingo card for George Gammon, where Trump announces tariffs and all of a sudden it pisses off all of these Canadian stores, let's say, and they're literally willing to take a hit to their bottom line just to give Trump the middle finger. That's what's going on here. So they say, okay, Trump, you want to do that? F you. We're willing to go ahead and take all of these products that are produced in the United States off the shelves. Not because we're having to pay a tariff on it, or no, think about that. The Trump tariffs are for the imports, not the exports going to Canada. So it's not like they have any, that they're disincentivized other than just giving them the finger to sell Jack Daniels or XYZ American alcohol, right? They're just doing that in response. And again, it's probably negatively impacting their bottom line because I'm sure there are a lot of people in there that specifically want Jack Daniels. And you can see right here on this sign, in response to U.S. tariffs on Canadian goods, products produced in the United States are no longer available. Just gone. Looking for an alternative, ask our team about extensive range of Ontario and Canada made products. So I'm sure there's going to be a lot of people that will be like, no, I do not want Ontario made whiskey. I'll go ahead and and go somewhere else, or I'll drink tequila or something like that. But this is definitely not a tailwind for the producer that's doing this. They're just collectively kind of coming together. And again, I'm not saying they're right or wrong, but it's obvious what they're doing here. And this is something that we now have to think through. And it's not about this isolated instance. It's not why I'm bringing this up in the video. The reason I'm bringing this up is so that we all understand that moving forward, we don't know how this is going to play out. Like you hope that it plays out this way, but we don't know at the end of the day. There are no certainties, there are only probabilities. And we should expect that if these tariffs materialize, we should expect that there'll be things that we didn't expect to have happen that will come to fruition. A little different than 2018 because we're not talking about a 1 or a 2% tariff on steel or whatever it was. When you're just broad stroke 25% tariff, again, assuming that's what they implement, that's where the producers cannot absorb that because their margins just aren't that big. And also this is much more politicized. I think it's much more out there in the open, and it's creating some negative feedback, let's say. Not that, again, I'm not saying that we shouldn't be doing it because Canadian liquor stores are taking Jack Daniels off the shelf. I'm just saying that moving forward, we've got to understand that there's going to be a lot of things happen that are not on our bingo card right now, assuming these things come to fruition. Now, even if they don't, there's so much going back and forth, and you don't know what's happening, and we're going to get into that in a moment, that this is going to disrupt markets if it continues. Again, you could think that tariffs are the greatest thing since sliced bread, but it doesn't matter what you think at the end of the day. It matters what the market thinks in terms of positioning our portfolio. So let's see. Jack Daniels maker Brown-Forman, CEO Lawson Whiting, or Whiting. Let me make sure we got the screen share working. Yeah, we do. Okay, getting back to that. Said on Wednesday, Canadian provinces taking American liquor off the shelves was worse than a tariff and a disproportionate response to levies imposed by the Trump administration. I'm disproportionate. I don't think it's really up to you to judge what's disproportionate. Wasn't disproportionate according to them. And at the end of the day, they're the ones that can choose to sell your stuff or not. Again, he says it's worse than a tariff. It's literally taking your sales away and completely removing our products from the shelves. He added company would watch out what happens in Mexico, which according to its annual report made it for 7% of its 2024 sales. Shares of the company were up about 8% after liquor maker reaffirmed its annual forecast, which accounted for the impact of the tariffs. So it's not affecting their share price, or at least not yet, but the CEO doesn't seem too stoked about it. Let's go over to Zero Hedge, because there's a few articles that kind of reference this trade war escalating, which really highlight the point that I'm trying to make here as far as just the uncertainty. And it's like every single morning I wake up, there's more trade or tariff news, but I don't even know I can't even follow it. Like as an example, right now, I mean, I'm neck deep in this stuff every single day. And I don't even know where we are with the tariffs on Canada and Mexico. Like, I know that he announced it, and then he said they were going to pause for a month. But I mean, like, read this article or headline: White House delays Canada-Mexico automatic tariff for 1 month. Okay, but I thought we delayed all tariffs for a month 2 weeks ago. So is this a month on top of the other month? And is it just for, you see what I'm saying? Like, I can't keep track of it all. And if I can't keep track of it all, guess what the market thinks of it? I mean, it's pretty crazy, really, on many, many levels as to what's going on. And by the way, I thought Justin Trudeau was out. Like, why is this guy still going over to Europe to talk about Ukraine or Zelensky? Why is he still representing Canada? I thought he was done. We've had enough of this guy. It's like, leave already, for heaven's sakes. Jeez. Nobody wants you here. Like, not even your party wants you here, dude. Just for heaven's sakes, ride off into the sunset. Do us all a favor. Anyway, getting back to the art. Oh, this is the picture from 2019. But he's still representing Canada, because I know that he was just off in London after Zelensky left the White House, and he was there with Macron and like everyone else. He's like a beta orbiter for some like hot chick. If you guys follow Rolo's stuff or Rich Cooper stuff, you know exactly what I'm talking about. Like, he's one of these beta males that just like orbits around this hot chick, just dreaming that she will give them the time of day. He's like a beta orbiter for the global elite and the World Economic Forum. Here's a quote from Carolyn Levitt. We are going to give a 1-month exemption on any autos coming through USMCA. As far as this trade deal negotiated with Canada and Mexico in Trump's first term, reciprocal tariffs will go into effect on April 2nd. I would assume that's according to Canada, but how do we know they're not going to delay those? And I mean, this is crazy. This is crazy. As noted below, the announcement came after administration officials met Tuesday to discuss the matter with heads of Ford, GM, and Stellantis. So basically what they're doing is they're meeting with Trump, and they're saying, dude, I don't know if you've thought this one through yet. Like, thanks a lot for the pat on the back. Like, we appreciate all the rhetoric that you want to help us out, and you want to bring manufacturing back to the United States, and you want to help us in our effort to compete against China and Japan and all these other car manufacturers. We appreciate it. But if you do this tariff with Canada, I'm assuming it's because a lot of their parts come from Canada, you don't understand what's going to happen in the short run. And we would guess that it isn't something that you would like. I think they're kind of having that come to church moment with Trump. Maybe. I mean, you have to ask yourself, if tariffs were so incredible right from the get-go, why are Ford, GM, and Stellantis going to Trump and saying, no, don't do the tariffs? I mean, if they really helped them, obviously they'd be in favor. And if the tariffs are that great, why are we pausing them? Again, maybe it's just a negotiating tactic. It could be. We'll have to see how it plays out. So Trump also accused Trudeau of using the tariff issue to stay in power. Yeah, I don't know how the politics work up there, so I probably shouldn't even be commenting on it. But I don't know why he is still hovering around here. He was unable to tell me, I guess this is according to Trump, he was unable to tell me when the Canadian election is taking place, which made me curious. Yeah, that makes two of us. What's going on here? So I guess Trump is in the exact same boat I am. He's like, why the hell am I still talking to this Trudeau guy? Like, hit the bricks, buddy. I then realized he was trying to use this issue to stay in power. Maybe. So Lutnick clarified there's going to be 25% tariffs. It's not the middle as in a number. I think it's the middle in terms of USMCA, suggested items covered by free trade deal between the countries would receive a different tariff treatment. I mean, who can keep, there's just no way you can keep track of this. You know what's crazy is I was having a great conversation and listening to what Keith Weiner was saying. Keith is an incredibly smart guy that just happens to be sponsoring this channel for the next couple months with his company, Monetary Metals. I'll tell you more about them in future videos. But he was talking about how the last round of tariffs that Trump had in his prior presidency, how there were like 57,000 requests for carve-outs, not from other countries, for the United States, and how they were granting some of those carve-outs, but you got to go through 57,000 of them. And who do you think who's getting the relief? It's the people that are the big donors. It's the people that helped Trump get to where he was, as far as the presidency. It's you scratch my back, I'll scratch yours type of thing. It's basically political favors. And I get it. He's doing some great stuff with Doge and everything. But at the end of the day, when you're taking the control of the federal government and expanding it to this extent, you have to assume there's going to be some favors, and that could create an economic distortion. I mean, let's remember why we got rid of the tariffs to begin with. I think most people probably haven't done the research on that. So it is true that prior to the income tax, we funded the federal government with tariffs. But the reason why back then, I'm not saying it was a good idea, I'm just giving you the rationale. The reason why the public was so adamant about going from or away from the tariffs to an income tax was because of all of the corruption in the central government that was created by those tariffs. Because they would change, let's just say every year, and then you would have all the lobbyists, you would have all of the special groups come, and they'd try to, just how DC is. And so a lot of the economic policy of the time, as far as these tariffs, really didn't have anything to do with what was a net benefit to society. It was, or what was fair, what was morally correct. It was more so just the swamp, just the how am I going to get elected? How am I going to gain power? And then what favors do I owe XYZ corporation? So we just have to realize that and I'm not saying it's going to happen again, but we have to realize that's why we went away from tariffs to begin with. And there's a strong possibility that if you get tariffs, especially to this degree, now hopefully we won't get them. Hopefully they're just a great negotiating tool. But if they are implemented, my goodness gracious, Doge is going to have a lot of cutting to do in order to make up for all the additional federal government and basically trading favors back and forth that will be happening as a result of basically picking winners and losers. So Canada responded to the U.S. tariffs by announcing an initial $30 billion surtax on a variety of U.S. goods, from orange juice to motorcycles. The plan is for additional 125 billion Canadian of goods to be slapped with 25% surtax 3 weeks later if U.S. tariffs remain in place. I mean, it's just this pissing match, just tit for tat, back and forth. At the end of the day, it's. I asked the question yesterday. I mean, is this really about economic policy or is this about ego? And I understand that there's a large percentage of the audience that is super, super pro-Trump and super, super pro-tariffs. But I would encourage, because you guys know the positive arguments for tariffs. I don't need to reiterate that. But I would strongly encourage you to consider the fact that there are no solutions, there are only trade-offs. And on net balance, yes, the tariffs may be beneficial. Not my view, but granted, I think there's a good argument for that. But you have to acknowledge the fact that they're trade-offs. You have to acknowledge the fact that there are costs. It's not just benefits. And you have to be aware of those potential costs in order to do a proper analysis. In reaction to the U.S. tariffs, Trudeau said he doubts fentanyl is the issue and instead suggests Trump is using them to cause a collapse in the Canadian economy. I don't know. I'm not going to comment on that, but I will say that at the end of the day, we have a fentanyl issue. It isn't just exclusive to one reason, right? The reason we have a fentanyl isn't exclusively because it's coming in over the border. We also have a fentanyl issue because people are choosing to use it. If no one chose to use fentanyl, we wouldn't have a fentanyl problem. It wouldn't be coming over the border. So I'm not saying that all the responsibility lies on American citizens for using the fentanyl to begin with, but you have to lay some of the blame and some of the responsibility on the people that are actually using the drug. Just like you got to put some of the responsibility for a murder on someone who actually pulls the trigger of the gun, as opposed to the gun being accessible to them to begin with. Okay, so now it's just Trump and the beta orbiter just going back and forth and arguing with their stupid pissing match. Okay, I've got no time for that. There was one other article that I wanted to go over. Yes, I think that was on CNBC to illustrate how you just don't know how, to illustrate how maybe it was over here. Let's try one other place because I don't see the article that I wanted to discuss right here. And if I can't find it, we're going to move on. Yeah, let's go ahead and move on. You guys get it. I was basically going over this just to highlight the fact that there's going to be a lot of unintended consequences if these things do come to fruition. There's going to be knock-on effects. There's going to be things that pop up that no one could have foreseen. And even if they're just a negotiating tactic, you've got to understand that the market perceives them to be negative, even if you think they're very, very positive on net balance. And you can see that right here with the Dow up almost 500 points, NASDAQ up about 1.46%. And look at bond yields. That's the truth serum. Bonds way up today. Why? Because there was news that came out that, where these tariffs are being delayed, where they could be less extreme than we thought. And whenever you get news that there may be fewer tariffs or they might not be implemented or they're delayed, the market responds to that in a very, very positive way. Said another way, this big down move that we saw in the 10-year Treasury, a lot of it was most likely a result of the tariffs. Now, it's at the end of the day, it's all about inflation and growth expectations. But why were the growth and inflation expectations coming down? I think because of the underlying economy, but also because the people that are buying along to the curve, these big mega banks and hedge funds and pension funds, are looking at the tariffs as though it's going to exacerbate whatever problems we already have in the economy, at least over the short run. And that's why you're seeing the big down move in the 10-year Treasury. And that's when you get a little reprieve from the expectations for tariffs, then you see the bond yield go up in relation. And then you also see the stock market, S&P 500, the Dow, and the NASDAQ go up as well. And I would imagine you're going to see crypto go up to, yeah, there you go. And you've got Bitcoin way up. I know there was, I think, some other news about the Bitcoin reserve, but I think a lot of this is just kind of a little bit of risk on due to the fact that there was less rhetoric today around the implementations of tariffs. And therefore, people took that as if the probability decreased slightly. And they're probably coming to that conclusion because of these delays that, quite frankly, I can't figure out. Geez. And as far as economic data, that I wanted to discuss, a big key component here is the price of oil. Now, it was not up today, which I would have thought it would be based on everything else being a little bit more positive. And it's still down almost 3%. So I know a lot of this decline is demand driven, which is not it's a big red flag for obvious reasons. But then we see that a big move, coming down from, let's say, high 70s to where it is today at around 66 is probably because the OPEC Plus is reducing their production cuts. But then you have to ask yourself, why are they producing more, right? Why are they reducing the production cuts that were almost at all-time highs? They were at GFC levels. And the reason is because they need more revenue. And these production cuts didn't work. Why didn't they work? Because sure, you're reducing the supply, but you're doing that at the same time demand is coming down. And if demand goes down more than supply, price is still going to go down. And so they keep, supply cut, trying to get it up to 80 to 90 to bring in that revenue. And finally, they're like, okay, this isn't working at all because the demand side of the equation is plummeting. And therefore, to get the revenue we need, because our economies aren't doing that great, we just have to sell more. Next, what I wanted to discuss is Germany. Oh, you know what? Here's the darn article. I won't go over it, but just quickly, guys, here's the headline that I wanted to read to you guys. This is what I was looking for, by the way. Right here, Ontario adds tax on electricity exports to the United States. So you're not only getting Canadian kind of tariffs, you're getting province tariffs as well. And it doesn't surprise you because Ontario, I think they're super, super liberal over there. But just another thing that you might not have expected. Here's what's going on in Germany. And I want to use this to illustrate how ridiculous this Keynesian approach is to an economic downturn, and how it never ceases to amaze me that these experts and economists and central planners and politicians can do the same thing over and over and over and over and over and over and over again and somehow expect different results. You guys know it's the definition of insanity. But at no point in time do they ever question the efficacy of the stimulus or the Keynesian model. It's just, how obtuse can you be? I mean, it's I don't know if it's ego getting in the way. I don't know if it's cognitive dissonance, because if it was proven that the Keynesian model that you grew up with and learned in school and based your investment decisions around and your whole career is based on, if that turns out to be fake news, if that turns out to be disinformation, then it's like for a lot of these professionals and career economists and experts and analysts, I mean, it really, where do you go with that? It's almost like, being a Christian or in whatever religion and learning, you having something comes out and say, your higher power doesn't exist. What do you do with that? That's pretty overwhelming. And I that comes from a Christian. I haven't come to that conclusion, of course, because I'm still a Christian, but it gets to the point where you've built your whole life around something being true, and therefore it makes it impossible for you to question it, even if all the evidence suggests you're completely wrong. Germany's fiscal U-turn could be a game changer for the country's sluggish economy, according to analysts. A game changer? I just want to ask these people, when has fiscal stimulus actually been a game changer? Like Japan? I mean, what QE are they on right now? They're on QE, what, 25? Their debt to GDP is 230%. Look at China. I mean, they have this economic collapse over there, and they came out with the stimulus bazooka, the fiscal stimulus. What was that? Like 6 months ago? And then they come out with another stimulus, another stimulus, another stimulus. And then the market's like, oh, well, we kind of like this stimulus, but we don't like this stimulus. As if it's just the stimulus package itself. And again, there's such a lack of self-awareness to the point where, oh, well, I know why the stimulus didn't work. They didn't do this little tweak over here, or they didn't do that little tweak over there, or they just needed to add an extra $5 billion over here, as opposed to just sitting back and looking at the history of quote unquote stimulus that is never, ever, 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 ever stimulative, and saying, you know what, maybe we got it wrong. Maybe we're looking at this. Maybe our model is insufficient. Maybe our model is just completely the opposite of what it should be. But of course, that brings in the cognitive dissonance again. Germany's prospective fiscal U-turn could prove transformational. And another thing, too, that's amazing to me is they never just stop and say, well, how is this money going to be spent? Like, let's just assume for a moment it was true that there is a multiplier on government spending. Okay, well, it's completely unrealistic to say that just whatever the government spends on, that's going to be a net benefit to the economy. I mean, what if they're just spending money on digging holes and filling them back in with dirt? Like, you're telling me that's going to have some sort of multiplier effect? Of course not. So it always amazes me that, oh, we're going to do the fiscal bazooka. Okay, great. But what are you actually going to do that's going to have a multiplier? And they never get into the details. I mean, what if they just do this fiscal bazooka by sending $1 trillion over to Zelensky? I mean, how is that going to help? I'm not saying that they would, but how is that going to help the economy? And also, one of the first things that kind of dawned on me, one of the first questions I asked when I really started to get into this economic stuff, and this would have been, 2014, let's say. I retired in 2012 and I started to get into it, but I really, really got into it in 2013, 14. And one of the first questions that I had when I was going through kind of the Austrian view and the Keynesian view, with the Keynesian view, I always thought to myself, okay, I get the infrastructure spending argument, but what if you already have the infrastructure? And back then, I think it was, Paul Krugman coming out and saying that we need to get inflation up to 2%. And in order to do that, we just need more government spending on infrastructure. I think that's what all the Democrats were talking about. And I'm like, what infrastructure does the United States not have right now that if you implemented it, you would just transform the economy, right? And now I get it. There's a lot of infrastructure that needs to be fixed, but that's not what I'm talking about. As an example, here in Colombia, the two major cities are Medellin and Bogota. And Bogota, by the way, is about the size of Chicago. And we're talking about 12 million people. And Medellin, maybe 4 million. So we're talking about Phoenix and Chicago. And as the crow flies, I don't know exactly, but just for the sake of the example, as the crow flies, they're only like, I don't know, maybe 100 miles away, something like that. Now, you would expect as an American that if you were to drive from, that 100 miles transporting goods in like a semi truck, that it would take you, 100 miles. So call it 60 miles an hour. So just call it whatever, an hour and a half or something like that, 2 hours, right, with a truck stop. Okay. Well, try 10 to 12 hours. Why? Because there isn't a highway. It's all these crazy mountain roads that are one lane. And you're having to, I mean, some of the times you're going through mud slides and all this craziness. And therefore, it's like, okay, think about what that does to GDP, and think about how much of a burden that is on the ability to efficiently transport goods back and forth just between these two cities, right? Where if you had a, let's just say it takes 12 hours. If you had a highway that takes 2 hours, that is infrastructure that's going to move the needle. Now, I wouldn't say that I want the government to do that. I'd much prefer the private sector. But yeah, absolutely. That's going to have a multiplier. But if you've got, if you're just repairing, if you're just painting the stripes on I-10, is that, you already got the road, right? Now, it could need some servicing. You'll put in some reflectors and maybe put on the grid on the side. So if you fall asleep, it goes like that. Okay. But that's not going to reduce your time driving LA to Phoenix to a half hour where it's 5 hours right now. You see what I'm saying? And that never made sense to me. And I thought that, there's just something that I'm not seeing here. There has to be a part of their argument that I just don't understand. Wrong. The bottom line is they don't have an argument for that. It's just whatever the government spends on, as long as they're spending money, it's got to be good. It's got to be stimulus. Well, no. If they're misallocating resources, creating malinvestment, creating economic distortions through that spending, you're going to have a negative multiplier effect. And no one ever talks about that as far as these experts or these analysts. And why? Because they're all Keynesian. And then it goes back to the cognitive dissonance that we talked about before. And when in reality, especially in the developed world, I would argue the majority of fiscal spending has a negative multiplier, not a positive multiplier, meaning the more you spend, the more it reduces economic output. And what really drives me crazy is the evidence overwhelmingly points to that conclusion. Overwhelmingly. But yet all these people completely ignore that and just double down on the definition of insanity. That, oh, well, we've done QE or we've done fiscal stimulus, the bazooka. We've done it 25 times. And damn it, we're still in recession. But we must not have just done it right. Or we just need to do more stimulus. It just has to be more fiscal. That's the conclusion, as opposed to, maybe this fiscal doesn't work. Unbelievable. Materializing these plans will mean changes to German constitution. Right here, big, bold, unexpected, a game changer. Like, who are these people? This is Bank of America global research economist and analyst said in a Wednesday note, adding that the package meaningful changed the outlook for Germany's economy. For a couple years now, Germany's economy has been sluggish, teetering on the edge of technical recession, defined as 2 consecutive quarters of gross GDP declines. The national GDP has been alternating between expansion and contraction in each quarter throughout 2023. What's also just unbelievable to me is they look at a technical recession and they never, ever, ever think to themselves, maybe it's the private sector that can get us out of the recession. Maybe we just reduce the regulations and the rules and the epic amount of bureaucracy in Germany and the Eurozone. Maybe if we just, it's like you've got this guy trying to run and he's got a ball and chain around his ankle, and he's running pretty slowly. And the government, these politicians and experts and analysts never, ever, ever ask the question, I wonder what would happen if we took off that ball and chain. I wonder if he would run faster. Nah, no way. Must be, we got to put more wind in his back. We've got to somehow artificially, we can't take off the ball and chain. I mean, that can't make him run faster. Absolutely not. It's got to be something else, right? It's got to be more central planning. Isn't that, and that's, I mean, I'm going off on a rant here, but this is, I think, completely justified. Look, the reason you're in a recession, you frickin' idiots, is because of central planning. Let's not forget that you likely wouldn't be in this bad of shape if you didn't take away all the nuclear power, if you didn't take away the energy, if you didn't say, hey, I know, let's just put up these solar panels in a place that's never sunny. Hey, I know, let's just put up these windmills and try to get rid of all the bad, evil fossil fuels. Okay, so that's central planning. That's idiotic authoritarians and the Malthusian cult completely destroying the basis of any civilization or economy, which is energy. And then so the problem, obviously, central planning, because the free market never would have gone that direction. And so then the problem is central planning. And then what's the solution? Oh, it's got to be more central planning. We just didn't have enough central planning. It's never looking back and saying, oh, well, maybe it was those stupid, idiotic government policies that created the recession or the economic downturn. No, that couldn't have been it, right? And maybe, just maybe, we need to free up the private sector and let them do what they do best. Because, and the reason they can never come to that conclusion, because if they did, that would make their job obsolete. Right? Like, I put out a tweet today where, I don't know if it's Trump or the White House or something, someone's crazy idea is to come up with a czar for affordability. Oh, no, that's what it was. An affordability czar. Oh, that's what we need. We need the government coming in and doing all their models and trying to tell the private sector, or trying to give a proposal to Trump about how to make things more affordable. And I said in the tweet, I'm like, look, you frickin' idiots. Let me save you the time and money on this stupid czar. Get government out of the way and let the private sector produce more stuff. And magically, things will become more affordable. We don't need a czar. We don't need bigger government. We don't need a wing of government, another program or whatever. It's simple, straightforward. A third grader could tell you how to make things more affordable. Make more stuff, you idiots. But no, we got to have a czar for that. I mean, I can tell you the first thing to make things more affordable: get rid of all the czars. We can start right there. I mean, why is Doge? They're doing such a great job at making the government more efficient. What are they doing about this? The affordability czar. You know, why is Elon Musk not going over to Donald Trump and be like, you know what? That's a really bad use of resources. I mean, this stuff, it drives you crazy. Man. It's just so insane. It's just, and it just is completely void of all common sense. And that's what I think frustrates me the most. Look at this. Here's another quote. Tonight's robust rhetoric implies that the open-ended borrowing room for defense will be used at a pace that could bring German defense spending to at least 3%, perhaps as early as next year. Oh, well, that's awesome. If we just allow the government to borrow a lot more money and use it to build bombs, well, we know that will increase the standard of living for all society. I mean, come on. What do we? Yeah, that's what we need to do. We need to make some more bombs so then we can blow up a lot of our infrastructure. So then we can just build it back again, and that will create an economic boom. Here's the policy detail. I can't even go through this. Let's just. It's going to ruin my dinner because my blood pressure is going to be too high, and I'm going to be pissed off, and I'm going to be thinking about this for hours on end after I stop doing the live stream. So, for the sake of my sanity, let's just move on to the next topic here. That would be the dollar. If I could find it right here. So dollar down at 104. So this is actually some good news. Good news, good news, good news. And let's see if we can zoom out. There's a one-day chart. Let's go to a 6-month. There you go. So we were all the way up near 110. Why is this bad? And again, there's no solutions, only trade-offs. There's costs, there's benefits. Now, one of the benefits is it would make the stuff coming in cheaper for the American consumer, which would reduce the impact of, or would reduce inflation. It would make it lower than it otherwise would have been. But this puts massive strain on the global economy. Massive, massive strain. Because whether we like it or not, most commodities are produced in dollars. There's all commodities are produced in dollars. And there's a tremendous amount of dollar-denominated debt. So if you're a Japanese producer, let's say, the majority of your inputs are priced in dollars, and you've got this mortgage payment, let's say every single month, where you've got to come up with, let's say, $1 million. That's your debt payment every month. Well, if you're selling to the local economy, especially, your income is denominated in yen. So even if the price of those commodities doesn't go up in dollar terms, if the dollar goes up against the yen, then that means more yen is required to buy the exact same amount of stuff, or more yen is required to make that exact same $1 million payment. And therefore, what happens to your profit margins? They reduce, and sometimes they go negative. This is why the quote-unquote strong dollar is just so destructive for the global economy. And if we're looking at this from kind of like a MAGA view, you could say, oh, well, this is good news because we're putting America first. And okay, I get the argument, but again, you got to do a cost-benefit analysis there. And the bottom line is, if the entire global economy collapses or goes into a crisis or even a contraction, that is going to negatively impact the United States. Now, it doesn't mean that we go into a recession, but it means that the economy wouldn't be as good as it otherwise would have been. And we have to consider that in the short term. Even if the long-term view is that would be a net benefit to the United States if all the other countries collapse and we go back into a scenario like we were in the 1950s, where we're basically the only country standing. So, of course, our economy is going to do extremely well because we're the only economy that is producing anything, because everything else has got bombed to oblivion. So my point is, when we're seeing this decline, and it's probably because of today the news came out where the tariffs got extended or something like that, because tariff short term, I think, is dollar bullish. But we got a bit of a reprieve, and look, it might not seem like a lot from the dollar going from 110 down to 104, but trust me, if you're one of those Japanese producers, you are sweating bullets right now, and for the moment, you can take a big sigh of relief and then just keep your fingers crossed that we go below 100. Because if we go down to 99, 98, now all of a sudden you've got the monkey is off your back, so to speak. And even if the dollar goes even lower, then that's going to be even more beneficial to them, because that would increase their efficiency exponentially, because more of those yen, as an example, are fewer yen are going to be needed to pay off the debt, and fewer yen, in other words, your cash flow, is going to be needed to pay those input costs. Therefore, your margins go up, you hire more workers, and the global economy really starts to kick it into high gear. And going back to our previous discussion that got my blood pressure up over the stimulus, this is one thing that could actually move the needle as far as the German economy, and that would be the dollar going down. Now you say, well, they're a big manufacturing base, they're exporting, so the dollar going down, this would benefit the exporters who are in the United States, but I can't find much evidence at all that the country with the currency that collapses the most in value wins as far as exports. Usually you kind of usually you see the opposite. So I think on net, this would be extremely beneficial if we could get down to 99, 98. Now, it's not my base case, unfortunately. As you guys know, I think the tail risk to the dollar's on the upside on the DXY, not the downside. But I'm just going through a thought experiment that if we could, or if it did go down to that extent, it's going to be extremely beneficial for the global economy on net, and then also I would say for the US economy as well. Okay, guys, enjoy the rest of your evening. As always, make sure you are standing up for freedom, liberty, free market capitalism. I will see you on the next video.